Welcome back. Now, activity in South Africa's construction industry lifted in the third quarter of the year. 7 of the 10 constituent indicators comprising the Afrimat Construction Index are in positive territory. Independent analyst Roelof Botha joins us now for a detailed analysis of the index. Roelof, thanks so much for your time today. So we're seeing a pickup in activity on a quarterly basis, up 3.6%, but on an annual basis, we are seeing activity down 1.3%. Just take us through the disparity there.
Yes, it is a point of huge concern to us, not only at Afrimat, but for everybody involved in the construction sector in South Africa. It seems as if we are going to continue, at least for another couple of months, to pay the price for excessively restrictive monetary policy. If, for a country like ours with a huge unemployment problem and stagnant economic growth, to have one of the highest interest rates, lending rates in the world, we had the highest interest rates in 14 years, is just ludicrous as far as I'm concerned. Fortunately, the rate hiking cycle has started to decline, but on a year-on-year basis, it has obviously not been remotely sufficient to generate some demand in the economy.
You mentioned something important there. You mentioned that the rate cutting cycle did start in the third quarter, and I guess the third quarter then a really significant quarter as well, considering that it was also post the national election. Do you not think that perhaps the sector had a bit more room to grow?
Yes, the recovery of the value of billings completed on a quarter-on-quarter basis was quite stunning, 23%. But it's still down year on year.
Yeah.
And that 23% comes from an unbelievably low base. It is still probably half of what we did before COVID. And apart from the criminality at many construction sites, the biggest single dilemma or obstacle facing this industry remains the very high cost of capital. I mean, what a lot of viewers don't realize is that the total value of household credit in South Africa, household credit extension, which is a big figure, more than 2.1 trillion rand, of which about 85% is mortgage loans. That figure in real terms is lower than it was 10 years ago. I've been around for the better part of half a century, and this economy has never been able to grow at high sustained rates unless household credit is growing. And I cannot understand why the Monetary Policy Committee doesn't have a look at the second part of their mission statement, which says that apart from trying to keep inflation relatively low, they must keep an eye on growth and employment creation. It is as if they've forgotten about the second element of their mission statement.
So I guess then you're advocating for bigger rate cuts.
Well, absolutely. And you know what? I can tell you something. I'm in very good company. Joseph Stiglitz, a Nobel Prize winner in economics, has written that, and I want to quote him, central banks' unwavering determination, not all of them, to increase interest rates is remarkable. In the name of taming inflation, they have deliberately set themselves on a path that may cause a recession. And quite frankly, that is just what has happened in South Africa. Because there's no demand in the economy. You cannot combat supply shocks like the sea freight charges, which increased by 700% as a result just after the worst of the COVID lockdowns, and a 400% increase in oil in the oil price inter alia thanks to Mr. Putin's military interventions in Ukraine. You can't combat that with higher interest rates. All you are doing is you're causing the pain. There's now long run pain as well.
So yes, on one side, to boost growth, we do need some relief when it comes to consumers, so meaning, lower interest rates. But on the other side, we still do have to do a lot of work on the ground in terms of structural reforms to also then boost growth, right, Roelof?
No, absolutely. And but that's not the Reserve Bank's task.
Yeah.
And they should know that this is going to take a little bit of time. The National Logistics Crisis Committee, according to Andries van Heerden, the CEO of Afrimat, is doing a good job, but it's a little bit slow. They need to get the private sector more involved. I'm thinking specifically of that contract that was awarded to that Philippines company, which Maersk from Scandinavia is now disputing. It's just a little bit too slow. I think all of us know about the iron ore stockpiles in various parts of the country. We need to look at the logistics. Just fixing and expanding the logistics infrastructure can probably get us back to between 3 and 5% growth. But then there's newfound commitment, the government of national unity, which is a good thing, of partnering with the private sector. It needs to build up a little bit of steam.
And you know, you touched on my next question here. In October, we had Finance Minister Enoch Godongwana just pledge his commitment to improving infrastructure spend within the country. I guess that, you know, also providing a bit of a boost for the sector.
No, absolutely. But I wish Mr. Godongwana would whisper into the ear of the Reserve Bank's Monetary Policy Committee that even if they involve, as is their plan, the private sector has to mobilize capital, working capital. And right now, the real cost of working capital in South Africa is 8.5%. It is crazy. That is now the prime overdraft rate minus the CPI. It was 3.1% in the term of office of the previous governor of the Reserve Bank. Now, if you move from 3.1% to 8.5% real cost of capital, you increase the cost of capital by 174%. This is unbelievable. This is like economic suicide as far as I'm concerned. Interest rates have to come down. They have to come down faster and by larger margins. Then we can get this economy growing. We need demand in our economy. We don't need lower inflation. It's as low as it can go.
You know, okay, fine. Looking ahead then, we are in this cutting cycle. We most likely will see more interest rate cuts going into 2025. Is then the outlook for the construction sector upbeat?
Yes, fairly upbeat. One can see that in some of these indicators. I think the one that really stands out is the sales value of building materials, because that has increased quarter on quarter by 5.9% in real terms and year on year by 4.2%. So certainly it's not as if there's no life in construction. And of course, the employment rebounded quite nicely in the third quarter. If this can continue, the sentiment is there. If now on a pragmatic level, a tangible level, if the cost of capital can be reduced, then it will become easier for the private sector en masse to start joining hands with government in expanding and fixing our infrastructure. It can be such a pivotal growth driver also for job creation. And every job that we create in this country broadens the tax base and by definition allows National Treasury ultimately to also finance more spending on infrastructure. It's a win-win situation, quite frankly. All we need is the MPC to start lowering rates faster, as far as I'm concerned.
All right, Roelof, unfortunately we have to leave it there. We'll catch up with you again in the first quarter of 2025. That was independent analyst Roelof Botha.